Today's Animal Spirits podcast is brought to you by Groundfloor, the wealth tech platform that allows everyone to build wealth through real estate. Michael, a couple weeks ago, you came to me and said, "Hi, I just got off the phone with Groundfloor C." Up. Hi, Ben. How's it going? You talked to Groundfloor CEO Brian Daly, who we had on the show a few months ago, and you said they've got this really cool new app called Stairs that can work as a savings account.
Because we got like 2 or 3 emails. So I called him and I said, "What's the deal with this?"
Yes, we never heard of it. I don't think they did any advertising. And you can get 4 to 6% interest as like a savings account. And you download the app. So I think it's called Stairs app, or you go to stairsapp.com and get 4 to 6% in a savings account like vehicle. It's a very cool app. It's a really good user experience. I signed up for it immediately and started using it. Put some money in.
We're going to have Brian back on the show to discuss exactly where this money comes from, because of course it's not risk-free. But after going through it, I feel comfortable. So I have money in this. And what's cool about the app is you see the clock ticking, like your interest accumulating, sort of like
progress.
It's like the US debt, the ticking time bomb, but in reverse, because it's actually a good thing.
Yes. So check them out, groundfloor.com or stairsapp.com for more. And again, we're going to talk to Brian Daly again, the CEO, in a couple months, I think, right?
Soon.
Welcome to Animal Spirits with Michael and Ben. Michael, last week's show, we spent a lot of time talking about inflation. We didn't really get into it that much from a market's perspective. I know we've been kind of talking about this topic for a while now. The stock market and the bond market still don't care at all.
If you were a market observer such as yours truly, you would understand that actually maybe it does care. Do you know what's going on right now with growth stocks?
Okay, so you're saying growth stocks are getting hammered, so that means the stock market does care.
I'm saying growth stocks are getting annihilated right now.
Some of them are.
So
not the important ones that move the market.
Not the important ones, but I'm looking at Square. Holy shit. I'm looking at Uber and Lyft. Yuck. Oh, ooh. Lyft. Gross. I'm looking at Airbnb. Closed the gap after last week's earnings report. A lot of the higher beta. Zoom. Oh my God. Ew. It's ugly out there. A lot of these high beta names from 2020 are getting thrashed. I don't know. ARK, by the way, disgusting. I don't know if this is only an inflation story.
But did we shift the narrative then from it was only low interest rates that are helping growth stocks to now no, it's actually low inflation? Did we change? Because before it was if rates rise, these growth stocks are going to get crushed. Now it's, oh wait, inflation, that's the big deal.
So am I conflating the two? You don't think
No, I'm saying a lot of other people were saying it's rates, and actually I've written pieces in the past saying, why did value die, quote unquote? And the reason is because value tends to do better when inflation is running higher and growth stocks do worse. So maybe the whole interest rate thing was the wrong path that people were taking back then.
But anyway, a lot of these high growth stocks are getting seriously slaughtered. Why? I don't know, but I feel like inflation is a decent boogeyman.
Or their returns in 2020 were otherworldly, and it was people were looking for a reason to sell.
That doesn't do it for me.
If you compare, so let's do your little XY scatter plot chart where you show 2020 return versus 2021 return, right? We'll have to do that.
Okay, I will do this. I'll show.
That's a blog post for you.
2020 return with 2021 current drawdown.
Yes, and I bet that there's a pretty high correlation between high return in 2020, huge drawdown in 2021.
Yeah.
Sometimes it's not. I mean, the macro factors come into play here, but sometimes it's just the fact that
here's an interesting
these
one.
Stocks were up a lot.
Here's an interesting one. So you're talking about markets don't care. Well, there's a lot of different markets out there. The U.S. dollar. How about the currency market? Look at the U.S. dollar. This is multi-year highs, I believe. Multi-year highs. Absolutely scorching hot today. Highest level since since early 2020. But be that as it may, inflation is so high. I'm not saying what if inflation is high. Why is the dollar so strong?
I don't know. I was told in like 2012 the dollar was going to crash and not be the reserve currency of the world anymore. So I'm still waiting for that to happen.
But inflation eats away at the value of the dollar. Obviously.
Yes, but think about things on a relative basis.
But the U.S. dollar is measured against other currencies.
Yes, that's the problem. All right,
all right, enough about inflation. What else are we talking about?
Well, here's one of the more unfair aspects of inflation.
Okay.
So Rick Palacios posted this. He's a great follow on Twitter for all things housing related. He posted the gross margins for and then he compared it. He gross margin by year, and then the trailing 12 months
Of what?
Of housing stocks, home builders, and these things since Q2 2020 are up in a straight line. So they've gone from 20% to almost 25% now. This is the bad part about the stock market, where these corporations have all come out like they've just made out like bandits on this whole thing, because they basically got bailed out by the Fed and the government, giving a bunch of money. And then when higher prices come and supply chain problems happen, they go, we don't need this. Let's just pass it along to the consumer.
We'll just take it to margin. So this is the dirty part. This is the part about capitalism that pissed people off in big corporations. This chart sucks. This chart really sucks.
Yes, and this and if you want to, like, these corporations complaining about paying higher wages, they're all doing fine. Their margins are either staying where they were or they've gone up in some cases. Like, they can't complain about any of this labor shortage stuff. They should be paying people more.
I feel like this is now the fourth or fifth time we've spoken about this. But remember when lumber spiked and the CEO of Pulte and I forget some other home builders, they all said, we're going to take it to margin after lumber had crashed. The prices are not coming back down. And as a result, you have things like this. Not cool.
Yes. And if you want to hear a little bit more talk on us on inflation, the economy, last week we had our Super Bowl. This was your term. We've talked about him since the podcast started, Derek Thompson at The Atlantic.
You know, I cringed a little bit. I feel like I was a little too thirsty with the sports analogies.
That's all right. It was good.
Thank you.
So he has a new podcast at The Ringer called Plain English, and Michael and I were on it to do an economic roundtable. I think we handled ourselves pretty well. It was an Animal Spirits, Derek Thompson collaboration. Long time in the making, and it was fun.
One of the things that I said on that podcast was the media gaslighting people about inflation, which I don't love blaming the media for shit like this, but because there is inflation, but certain places are making it worse. So for example, MarketWatch tweeted this hot garbage dog shit tweet, which was subsequently deleted, by the way. I went to look for it this weekend. I couldn't find it. It was deleted.
Yeah, they did a correct. They posted a correction. They must have gotten slaughtered.
What did they say, Ben?
The original tweet said average Americans are paying as much as $100 to $200 for a single concert ticket, $90 for a bottle of wine, and $5 a gallon for gas.
Delete your account.
And then they said they.
By the way, if Twitter was on the blockchain, they would have given up all of their tokens for this nonsense.
Here's the problem. Inflation is high as it is. You don't need to make it sound even higher than it is. Like, why are they trying to make it? This is like the scare tactic stuff.
For clicks.
Right. I wanted to show this one too. I posted this on Twitter. This is like me having fun with context and numbers. So gas prices, retail gas, like the average across the country is at like $3.50 a gallon. Mm-hmm. And on that podcast with Derek, he made the point that like the reason people feel gas prices as inflation is because those numbers are so big.
I don't buy that, by the way. I don't buy that. I love Derek. It's good theory. I don't buy it at all. Not for a second. Dude, prices are up 50% in the last year.
Okay, 60% over the last year.
Okay, so you don't need to see the big numbers in order to feel it. When I see my tank at $70, I know.
But that's why we talk about gas prices so often, because it's just staring you in the face every time you drive down the street. Here's the thing. Yes, gas prices are up 60% over the past year.
Positive spin zone, positive spin zone.
Since 2008, gas prices are down 16%. And if you did that on an inflation-adjusted basis, gas prices are probably down 50% from 2008. Now,
okay,
this is fun with numbers.
You're measuring from the peak.
Yeah, and you're measuring from the bottom.
I'm not having
That's
fun.
The thing.
I'm not having fun with numbers.
All right, one more thing. You're measuring from the bottom. That's the same thing.
I was living in the bottom.
Yeah, I was living in 2008.
So changes from 14 years ago do not hold the same water as changes from 12 months ago.
That's my point. It's so psychological. Here's another one. Another fun with numbers. Okay.
I'm not having fun.
We basically almost had deflation in like 2020. No, listen. So what do you think the 2-year inflation rate is? If you mash up 2021 and 2020, what's the 2-year inflation rate?
3.5.
Okay, it's like 3.6, 3.7%. I'm just saying where you start these comparisons has a lot to do. Yes, but the media gaslighting people, that's when the pitchforks come out and I'm just saying. You say of course, but this is not everyone thinks this way.
No, I'm talking to you.
Okay.
Although I tweeted, this was very funny. Somebody put a sticker of Joe Biden at the gas pump.
I saw that at the gas pump I was at yesterday. It said I did that or something.
All right, I'm not gonna lie, I did it.
Okay. No, I saw it in Michigan too.
I put the sticker on.
Okay. You probably did.
Let's talk about shadow stats. This is a basic.
This is another one that like you don't have to make up stuff about inflation. So this was from Full Stack Economics, who we talked about a couple weeks ago about real estate. And they did this whole piece about shadow stats is this thing that I don't know Who is it? Is it a person? Is it a group?
It's an economist.
And honestly, the name probably is
It's
kept it going.
fantastic.
I think it's probably the name of it has probably kept it going more than anything. But apparently, someone finally dug under the hood to say, why is ShadowStat saying that inflation is so much higher than it actually is? And they figured out that if you would have used pre-1980 inflation calculations, inflation would be much higher. And the difference from this study was it would have been a 5% difference. But ShadowStats, and this is a 5% in total from like 1980 to 2011 or whatever.
So using pre-1980 methodology, they changed up the methodology. The difference over that 30-year period or whatever it is more than 30 years, is a 5% cumulative difference.
Yes.
And what did this person do?
And ShadowStats used it as a 5% annual difference. They just basically added it on every year to show that, wait, inflation has actually been 11% per year, whatever it is.
So they're showing, so according to them, according to ShadowStats, they claim that inflation has averaged 9% over the last 21 years, which means that prices would have risen sixfold. I forget who is the author of this wonderful Substack, but they gave some numbers because they were actually they weren't a child like I was 21 years ago. Actually, yeah, I was a child 21 years ago. He said, when I entered the University of Minnesota as a freshman in 1998, tuition was $4,500 per year. If that price had inflated at 9% annually over the last 23 years, tuition would be $32,000 today. It's actually $15,000. In 2000, a chicken burrito at Chipotle cost a little more than $5. If inflation was 9% annually, it would cost $30 today. Actually, a chicken burrito where this person lives is $8.50. Lastly, in 2001, I bought a plane ticket to visit my sister in Dallas for $261. If that price had inflated at 9% annually, a similar ticket would cost $1,400 today. In fact, it cost $260. So he gave these numbers to the economist.
Hey, you know my favorite one of this?
Which one?
My daughter loves Home Alone, so we watch it every year on Christmas. And we got it there a little early this year. She sprained her ankle this weekend. I told you the whole story. We thought it was broken. Turned out it wasn't, but she was laid up all weekend. She played some soccer with friends. So we watched Home Alone. And they get like 10 pizzas at the beginning of the movie. And it was like $120 plus tip. That's in 1991.
Pizzas don't go up in price.
Pizza is like a huge inflation protected asset, right? Like the best deal ever if you're a parent and you're in a hurry. Do you guys have Little Caesars in New York?
Wait a minute. No, we don't. But you're saying pizza is an inflation hedge?
I'm saying it's a huge hedge because it never goes up in price.
So it's the opposite of a hedge.
No, that is a hedge.
No, from the buyer's point of view.
Yes, from the buyer's point of view.
I thought you meant as an investment, like buy pizza.
Oh, no, okay. So $5.55 out the door for a Little Caesars hot and ready. You don't have to order it. You walk in, you say, I want a cheese or a pepperoni, and it's ready to go, hot.
It's beautiful.
$5.55.
Can I tell you that this morning I was listening to Ransom, which is one of the best movie theater experiences I had as a child. And I hate even saying anything related to Mel Gibson, given his racist and anti-Semitic tendencies.
Good movie, though.
But man, that guy can make some good films. So in that movie, they called him a multimillionaire. Today, he'd be a billionaire. The ransom was $2 million. Guess what? Today, that price would be up sixfold. That would easily be up.
Or the ransom would be in crypto, right?
So ShadowStats was right in Ransom.
One more thing about Home Alone. Disney Plus made a new Home Alone movie called Home Sweet Home Alone. Just a complete and utter debacle. Like, they basically tried to remake the movie, only the kid wasn't as likable, and it wasn't really even thieves. It was very bad.
Interesting. Oh, speaking of Disney, this morning we were watching Aladdin before I put the boys on the bus, and there's a scene early on where they put Aladdin in jail, and one of the big goons tells Jasmine his fate has already been decided, death by beheading. And I'm like, what the fuck? How old were we when that movie? I mean, that movie was for like 7-year-olds. Yeah. Death by beheading.
Well, literally every Disney movie has a parent die in the first 10 minutes, pretty much. That's like how kids learn about death, I guess.
That's rough. All right, so anyway,
yeah, this was great. The other one I've found that's great is ShadowStats says that inflation is 9% per year, and they've, like Colin Roche always posts this, they've been charging the same for their subscription program for like 20 years. They've never raised their own prices. Just perfect.
Can I tell you what I did this weekend?
What's that?
I bought a TV.
To replace your one of the line on it?
Nope.
Okay. You're still sticking with the line.
I'm sticking with the line. Okay. I bought a 55-inch TV to replace my office TV, which is right on that wall. The volume's basically gone. This TV I got in 2010. I'm pretty sure it was over $3,000.
Okay.
Guess what I got a 55-inch TV today for? That's about 1.5 inches thick. Probably not
Got to
even.
be 500 to 1,000, somewhere in that range.
$800.
Yeah. You can get a pretty nice TV for that. Plus, with the smart stuff built in, it's a great deal.
And if you want a line, it only costs an extra $10.
It's not bad. All right, here's a deflationary piece for me. We have the little pendant lights that hang out over the island.
Pendant lights.
Over your island in the kitchen,
okay.
like that hang down. My son, and they have a little glass tube around them, looks nice, whatever. My 4-year-old son has broken 2 of those glass things. He threw a ball or something, crack, the whole thing broke, shattered, had to get a new one, replaced it, and he just did it again recently.
Oof.
And so
it's funny that, yeah, go ahead. I'm sorry, finish your thought.
I went through and I found our change order when we bought the house in 2017. It still had the light on, and I was going to order it from the lighting place. We got just this little local place, and it was like $100 back then. I was like, all right, you know what? I'm going to, instead of going through them again, since they probably charge too much, I'm going to look at Amazon. Amazon had the same light for $68.
Boom.
But this is why, like, the big companies are going to win, because they can do that and still win. Where like the local mom and pop shop that charges $100 can't compete.
As you're saying that, I've got like the lights over the island too. I'm just thinking, I have no idea what they look like.
Oh,
like I know I see them every single day, but if you ask me to describe them, I have no idea.
That doesn't surprise me. So.
Couldn't even pick it out of a lineup. I probably could, but all right. So crypto.com bought the Staples Center. I didn't even know. So crypto.com is it like Coinbase? I downloaded it like a while ago on my phone. You can't get it in New York, so I've never really been on it. But they've got a token because of course they do. And the token's going bananas. But this is
the one who has like Matt Damon as their advertiser now, right?
Oh, is that it? I wouldn't know because I'm like you. I actually DVR stuff. I don't believe in signs of tops anymore, even though it's like very temp. But come on, this is a sign.
You had one.
This is a sign.
You had a well. Hopefully they don't call it the crypto.com center. They should just call it the Crypto Coliseum or something like that.
They call it crypto.com.
Okay, it doesn't really roll off the tongue.
Center. I don't know.
So you wrote a piece about technology unicorns or something this weekend. What do you say? There's 1,000 unicorns now in startup land. Remember when the show Silicon Valley came out and that was supposed to be the top?
Yes.
I looked. That was 2014.
Yeah.
Yes.
Yeah.
That was supposed to be a sign of the top.
Honestly, if you were one of those people that are like, that was definitely one of those moments where you're like antennas up type thing. They literally made a show called Silicon Valley in 2014 when that was probably after Instagram was bought by $1 billion, which also was supposed to be a sign of the top.
And the crazy thing is, so much of the stuff that's happened since that show went off the air is 10 times crazier than anything that happened on the show. Right? By the way, Russ Hannigan in Red Notice.
What did you think of Red Notice?
Let me save it for recommendations.
Okay.
I've got to take on The Rock.
Okay. So Doug Colkit had a good tweet thread on what's going on in crypto. And I'll skip to the end. He said, frontiers have always been unique places with the best and worst of humanity on extreme display, places where anyone can redefine themselves, places overflowing with the type of dreamers and builders and weirdos that you might otherwise be lucky to meet once in a lifetime. Crypto is probably the only frontier our generation will ever get to experience, which is a bold statement, but maybe. But like all frontiers,
wait a minute.
It won't be one forever. Go ahead.
I don't want to like split hairs here, but I don't think anything in our lifetime is going to come along that's bigger than the internet. As far as like new and exciting. I know like the Web3 people want to be like, hey, we're just going to be just like the internet.
No, hang on. Dude, if you're 20 years old, you weren't alive for the birth of the internet.
Okay, so you're saying for young people, for this new generation.
And me too. I was 14 in 1999.
Okay. Yeah.
I mean, yes, it came into my life and stuff, but I wasn't like reading articles about it.
That's fair. I just think the internet had to come first for this stuff to all happen, and so I don't think anything in our lifetime is ever going to be bigger than the internet. That to me. You're
obviously not paying attention to crypto.
Okay.
Just kidding. All right. So Natick said something similar. He said, so Dave Natick did a post called Tokenize Everything, basically. And he said, it is simultaneously that the most interesting financial innovations in nearly a century are happening right now. And at the same time, some wild scams, malfeasance, and generalized stupidity are going to keep making headlines based on precisely the same underlying technologies.
This is why it's so hard for certain people, depending on which way you want to look. And this is why most traditional finance people hate crypto, because they look at all the bad stuff and say, see, look. And then the people who are into crypto look at and say, wait, look at all these smart people in here. These geniuses are putting all of their time and energy and their life's work into this stuff. And yes, that's why you can have these diverging opinions.
Somebody emailed us, this is the dumbest shit ever. I have been an investor in markets since 2012, basically index funds, reading your content since 2014. I have never seen anything like crypto gains. I bought some bullshit coin, having no idea what it is or why, simply on the fact that it lists on Coinbase. I'm up close to 50% of my little gamble. And the only thought I have now is why didn't I buy more when I was 90% sure it will go up like crazy? How does this market not turn everyone involved into gamblers and breaks everyone's expectations about future returns?
It could do that for some people. But I think, don't you think most people understand that, like, when the dumb shit coins go up, that it's like, this is just insane? And like,
I think so.
I think most people are kind of in on the joke. There are these true believers, I guess, but I don't know. I think most people understand, like, this isn't the real stuff that's coming out of this. These gains are just crazy, and whatever. It is what it is. That's kind of the way I feel. I don't think this is going to change people's view about this is changing investing forever.
Well, I think most people, like 98% of the average person's exposure to this new frontier is total lunacy and degeneracy. Right? Like,
that.
Obviously, if you don't know anything about crypto or DeFi, like, you're not reading what's being built.
So last week when you talked about getting scammed, we had, I think in the comments and emails, we had probably 3 different responses. One of the responses was, thank you, Michael, for sharing. I appreciate it. There was a lot of people and said, I feel for you, but I appreciate that you shared. One of them was, see, I told you that something like this could happen, blah, blah, blah. That was a small minority, but there was
what? Because there's no phishing scams in traditional finance. Nobody ever lost money with a credit card or a bank account. Never.
Right. Yes. And the
what
other
was the
one,
third? I'm an asshole?
No, a few people were, come on, Ben, get your hands dirty like Michael. You're missing out here.
Missing out.
Yes, because yes, I'm missing out on getting scammed.
You too could get rugged.
Yes. But I will say, especially from between now and like 18 to 24 months ago, if you would have told me 24 months how much of exposure I have to crypto in my life and work and portfolio, I would have said you're nuts. And so you and I have both made 2 probably private investments in the crypto space. And we've both invested in a fund run by someone we know, 2 funds now, I guess, by someone we know that is investing in this stuff. I'm more than happy to just be a passive investor in this stuff and allow other people. You've been trying to walk me through doing something on a MetaMask wallet for the past 72 hours, basically. It's too. If I based my thoughts on crypto exclusively on my workings with it using MetaMask wallets and all this other stuff, I would say this is a joke. It's never going to work. I wouldn't say that because I know eventually they're going to figure it out. Just like back in the day, ESPN.com took 24 seconds to load, right? So I know they're going to figure this out, but I'm fine not participating on the ground floor on that stuff. I know you use it as like a learning technique. You're using it to learn and understand these different things. I'm fine being more of a passive player here.
Makes sense. And I'm totally sympathetic to the idea that somebody who doesn't like do this as much as we do and thinks about as much as we do would try and get involved and say, this is the dumbest thing ever. It's impossible. I don't get it. Right? That's like most people's understandable reaction without going to the second level. Like, well, yeah, it does suck a lot right now. It's going to get better.
Right.
Right. Most people just leave with what it is.
And again,
today.
my light bulb moment stuff is when this interacts with wealth management in the wealth management space. And that's going to be our next week, Talk Your Book with Index Coop, which I think is going to be really fascinating conversation.
Can't wait. All right. So let's talk about Ken Griffin, the biggest troll on the internet besides for Elon Musk. So Corey Hofstein tweeted what happened perfectly. Corey said, nothing captures the current wealth disparity in this country quite like a decentralized organization raising $40 million from, quote, we the people to buy the Constitution only to get outbid by a billionaire. So we spoke about this last week. There was a decentralized autonomous organization that spun up together, raised $40 million, was going to buy the Constitution, which was only supposed to sell for 20. And Ken Griffin said, "F me, f you." Basically, the Robinhood crowd, the Reddit crowd that got in his case.
I'm sorry. This to me is just the whole thing is hilarious because this is a Logan Roy move. This could have happened on Succession, right? Like this is just a total. I don't care. I'm doing this kind of. I'm sure he said, I'll go up to 100 million for this.
There was no number. Whatever the number was, he would have got $1 million higher. So there was an article in the Wall Street Journal talking about this. And Ben, they do it every time. How do they find the people? I mean, I guess in this case, it wasn't that difficult, but here's the quote. We've referenced this in the show a million times, that there was always like a one random quote. Here, it's from Avi Flombaum, a 37-year-old based in Brooklyn, New York, who is an executive at a technology talent development company. Avi said, "It's sad." Oh, that was the whole quote. The whole quote was, "It's sad." I was expecting more. Avi said, "It's sad."
Yeah, you really nailed it. Yep.
Avi said, "It's sad." It is sad. My first reaction, I was on the phone with you when I found this out. I said, "What a..."
I don't know. I thought it was funny. I think the whole, I don't know. It made me laugh.
It pissed me off. I will be honest.
Because you know that he's been hearing from this Robinhood crowd for like 6 to 9 months saying Citadel is the devil. Yes. I don't know. I just think like that is the definition of FU money.
So Elon Musk is still a troll.
Of course.
So JP Morgan is suing Elon Musk or Tesla. They're suing somebody. I guess they're suing Tesla. So JP Morgan said, "We have provided Tesla multiple opportunities to fulfill its contractual obligations. So it is unfortunate that they have forced this issue into litigation." So Elon Musk said, "If JPM doesn't withdraw their lawsuit, I will give them a 1-star review on Yelp." Elon said this in a response to the Wall Street Journal. Quote, "This is my final warning."
See, this is what happens when you get people so rich. Nothing matters at all.
At $200 billion. Yeah, what are you going to do?
Right. He's Teflon, which makes me wonder, does he eventually get to the point where he is so detached from reality that he just does something that's so crazy where everyone's like, whoa, okay. Like, how far over the line is he going to go?
Oh, where he does something that's like, okay, got it. Where people are like, wait, this isn't funny anymore.
Yeah.
We have to step in. It's sad. Yeah.
Isn't that, I don't know. I can't tell, like, how do you have any self-awareness at all if you're that rich?
Right.
About anything?
Well, apparently you don't. All right. Time for great quarter, guys. Let's get into it. By the way, Quarter is the app that we use for earnings calls, blah, blah, blah. We've first talked about it a million times at this point. All right. 82% of S&P 500 companies, Ben, have beaten EPS estimates so far.
That's not bad because we thought that the comps were what got some of these companies, right? And I guess it's only happening to growth stocks.
So, all right, let's talk about, I mentioned earlier, Airbnb, massive quarter, massive stock increase. It was 178, ran all the way up to 210, filled the gap, as gaps do, they get filled. Coming back in. Ben, it wasn't...
What do you mean when you say that? So it goes up a lot and then it comes back down?
So a gap fill means, let's say that going to earnings, the closing price was 178. Okay? It opened up the next day at 201. So between 178 and 201, if you look at candlestick charts, there's a giant gap on the screen where no transaction took place in between those prices. And when the gap gets filled, it fills that gap, obviously. So now it is at it fell down to 176. So the gap has been filled. Anyhow, it wasn't fun, Ben. I got to be honest. It was not fun selling Zillow or Peloton down. What did I lose on those trades? 25, 30% on each investment, which, by the way, I was with Robin's friend yesterday. She asked me for some stock tips and I said, hold on. I told her about Zillow. I told her about Peloton. So I said, but I'm happy to give you stock tips. What do you want to talk about? What do you like? So it wasn't fun. It's never fun selling down because on the one hand, you're like, well, whatever, it's not fun selling down to the 30%. I don't need to get into the psychology why. However, since I sold, because you're afraid that you sell it's going to mark the bottom. So you're afraid of making one thing even worse. Since I sold, Zillow is down 17%. And since I sold, Peloton is down 21%. And what was interesting about Peloton was they announced a $1 billion equity offering and the stock was up 14%. But I was thinking, now you need to raise cash?
Right.
Now, when the stock is down 60%?
These stocks are both down 73% from all-time highs.
All right.
And those all-time highs were reached this year.
Look at like Square, Uber, Lyft. All of these names are getting just blown up. Zoom. So by the way, Zoom has earnings tonight. It's down 60% going into earnings.
It's gonna
So
get
you would
wrecked again,
think,
potentially.
as I did with these other names, listen, down 60% going into earnings. I think everybody knows it's bad. Well, actually, we'll see.
This is the year that the stock market took it personally. This is the Michael Jordan and I took it personally meme. Like last year, everyone thought stock picking is way too easy. You just pick these stocks that everyone's heard of and they're growing like gangbusters, and you crush the market.
Just pick the best names.
And then this is the year where that comes back to hurt you.
Meanwhile, Robinhood got crushed after earnings. I tried to get cute. I tried to buy. I took a very small haircut on that one. No harm, no foul. Lesson learned. But Robinhood is down 20% after earnings. Look at that stock, all-time lows. By the way, the stock is, Robinhood has now got a $23 billion market cap. I think they were talking about 80 prior to the IPO. Did you say Robinhood was going to be bigger than Coinbase? I can't remember. And I'm not trolling. Or was it the other way around?
No, I did. And it was for like 12 hours.
Okay. So, all right. So you nailed it.
Robinhood, this was like meme stock high. That stock's down 60%. And that's since August, I guess. I mean, we're seeing stocks get just annihilated. So the only thing propping up the market then, I guess, if you wanted to be one of these people, is the some value stocks and the huge behemoths.
Well, look at Apple. Look at Apple, all-time high. Home Depot. Well, these aren't big stocks. Home Depot lows. I don't even know why I just said that. But Microsoft is at an all-time high. Google is at an all-time high, or right there. Facebook is not. Let's see, Berkshire. But it's the big giant names. Oh, Nvidia, which we're going to talk about in a second. All right. Let's circle back to Zillow for a second. So Zillow said that they're just whacking all of their houses. They're just blowing out of them like they're like penny stocks. A quote is, "We intend to sell our remaining inventory, which represents less than 0.3% of all U.S. homes sold this year."
Right, it's nothing. By the way, a lot of people said that the takeaway from Zillow was, you see, algorithms cannot help you pick houses. The story in the Wall Street Journal last week was Zillow was making money on this when they were listening to their algorithms. It was when they trumped their algorithms.
Oh, really? I missed that.
And said, no, we need to buy way more. And they got away from it. And when humans got involved in the process, that's when things went crazy and haywire for them. They said, no, we need to keep buying more and more homes. And they trumped the algorithms and basically like fudged the numbers so they would buy more homes, and they didn't listen to their rules that they set in place at the outset.
I'm still scrolling through charts. Things look really ugly in a lot of these names. Look at IPO, look at SPAC, look at Moon, Roku, Teladoc. Oh my God, Teladoc. Teladoc was 310 at the high. It's now 109. Okay, anyway, this guy, Mike Del Preet, he's an iBuyer expert.
By the way, this is why I own index funds. I have a fun account where I buy some stocks, and it's 10% of my portfolio probably, and then I own a bunch of index funds.
Seriously, this is icky shit. All right. So he did a chart that shows Zillow iBuyer purchase activity, and the ramp up, there was too much.
Yes, exactly.
And then he has this other great chart showing their purchase price, and he compares Zillow, Opendoor, OfferPad. So Opendoor and OfferPad, two other iBuyers, came down. Zillow kept going, kept paying top dollar. All right. So this week we had Home Depot, we had Target, we had Walmart. And I think a lot of us thought that comps, meaning numbers year over year, obviously were very easy when you're comparing the depths of the pandemic to a year out. But we thought by this point it would be much tougher, especially with same-store sales. I guess not. Home Depot, same-store sales were up 6.1%. Target was up 12.7%. Walmart, 9.6%. So when I say same-store sales, these aren't new stores. These are stores that were around a year ago. Home Depot, we had positive comps every week despite unprecedented compares last year, and grew sales by $3.3 billion in the third quarter. So just what's going on? Insatiable demand?
I wonder how many people decided we're just going to do projects at our house. Like buying a house right now is way too hard. We're going to do projects. This was an interesting one on that. They talked about lumber, and they did say when lumber prices were like 3 and 4 times near-term levels, which they were not that long ago, they said they clearly saw units drop off, which then led to projects dropping off across the store. So like they did see lumber impact a few areas here where when the prices got too high, people pulled back. And it's interesting because like that price elasticity, like when does that hit things like used cars? Is that just because it's like you really need a car? Like when you need a car, you need a car.
Can't live without it.
So that like as we see inflation hitting places, you just wonder when eventually people say, all right, I'm tapping out for a while. I'm not going to buy more of this stuff for a while. When do we reach that point? A lot higher prices, I guess? I don't know.
So I was looking at the transcripts for how often they said inflation. This was interesting. I don't know what to make of this, Ben. Inflation was mentioned 25 times on the Walmart call because they said fighting inflation is in our DNA. Obviously, Walmart is a low price provider. On Home Depot, they said it 8 times and 0 times on Target, which threw me for a loop because I was Googling cost, rising, pressure. So they used words like cost pressure and things like this, but never once did they say inflation. Are they trying to trick the algos?
I guess so.
All right. Also, I listened to some of the Nvidia call. So Nvidia was $100 billion in 2019. It's over 800 today.
Jeez.
Aside from Tesla, have we ever seen a mega cap growth stock add this much market cap in so short a period of time?
This is one where people don't complain about it like Tesla. People get angry about Tesla going up. Some people do. And then you have the cheerleaders. Obviously, there's a lot of people who invested in Nvidia and talk about it, but it doesn't have the same fanfare for being such a huge company. It's the 6th biggest company?
Probably because in order to get the fanfare, you need the shorts, I think.
Yeah, that could be it.
All right, so Nvidia, record revenue up 50% from a year earlier. Record data center revenue up 55% from a year earlier. Record gaming revenue up 42% from a year earlier.
It really is different this time when these companies get so large and they're still able to grow at these numbers. Remember the past was how many companies can grow this high for this long and get this big? Eventually it tails off.
Mobison's baseline thing.
Yeah, and these companies all just annihilated that baseline idea.
I guess flip side is all the other growth names that are paying for their transgressions, as Walt Frazier would say. Okay, here's a quote.
But one Nvidia is now worth 25 of those other stocks, and that's why the market doesn't matter because Nvidia is still doing fine.
Our GTC event series, so that's a technology conference, showcases the expanding universe of Nvidia accelerated computing. Last week's event was our most successful yet, highlighting diverse applications, including supply chain logistics, cybersecurity, natural language processing, quantum computing research, robotics, self-driving cars, climate science, and digital biology. And if that sounds like a lot of buzzwords, that's the point. Nvidia is operating at the frontier of where all of the shit is happening, and their chips are in everything. They also announced plans to build Earth 2, which is an AI supercomputer dedicated to addressing the global climate change crisis. So Nvidia is a levered bet on AI and robotics and all that sort of shit.
So a couple weeks ago, I said I had my take on the metaverse and headsets and stuff, and saying I'm out on that stuff. That's me personally. I think this stuff is coming. And I think where it's going to start is work from home companies are going to say, all right, you want to work from home? We're meeting in the metaverse, and I'm going to send you a headset that's done by Facebook or Microsoft. I do think this stuff in our lifetime is going to happen, and it's probably going to be a pretty immersive experience for some people where it feels like you're sitting in a boardroom or whatever. Even though I'm personally kind of anti this thing,
I'm in. I can't wait.
It's going to be huge.
Huge.
I know that there's people who. I'm kind of like this. Go outside and do something. Meet with people in real life if you really want to.
Me too.
But there are introverted people who are gonna just love this, and they're gonna spend their whole life on this thing, and it's coming. It's gonna happen.
So Jensen Huang, the CEO of Nvidia, did this amazing YouTube video that Josh shared this with us. He turns himself into a cartoon character.
Toy Me was made with some amazing technologies that have become possible only recently, and barely so. I asked a few friends to ask this cute little guy some tough questions. Let's take a look.
Hi.
Hello. Hello, Toy Jensen.
Hi, please ask me anything.
What are the greatest threats of climate change?
The greatest threats of climate change are the effects on human health, food security, water supplies, and the environment.
Amazing. Anyway, can I just say, is earnings season almost over?
Think about it. You ready for a break?
I need to call timeout.
All right. Have you up to 2 times speed yet?
Oh yeah.
Okay.
One more thing about the earnings stuff. Walmart was talking about how they built their own. They built their own fleet to deal with the inflation stuff. They're
well, it sounded like Home Depot had something similar, right?
Oh, Home Depot.
Supply chain. Yeah.
We're going to get it. We're going to get our stuff. We're not relying on the barges. We're going to get it.
Yeah, that's what these companies that can do that. Yeah, eventually they had to. All right, here's one good thing about the inflation / labor shortage. So this is from Bloomberg. they did the John Deere union workers decided, okay, we have some power now. We're going to renegotiate. They did a deal with a 6-year contract that increases wages by 10% in the first year, 5% in the third and fifth years, and a 3% bonus paid on even years. And each worker receives an $8,500 signing bonus. This is like the good part about this, right? Workers have the upper hand finally and can band together and say, like, okay, you can finally start paying us now more. Especially if you have these margins that are just amazing, give some of it to us, right? And this is your whole thing about, unfortunately, it's big corporations that can do this probably, and not small businesses, but that's the way of the world now, I suppose.
I guess congratulations are in order. Jerome Powell, second term. How do you feel? Were you nervous?
That would have been I think that would have been a misstep if they would have taken him out.
I'm shocked to hear you say that.
Yeah, I'm sorry. You can't be one of these people who said the Fed is behind the 8 ball or they've painted themselves into a corner for so long. What they were able to do coming to like turn around the credit markets in the pandemic, if you look at some of those charts, I'm sorry, they navigated that about as well as they could have.
They bought fixed income ETFs. You got to love that, right? Right? Everyone loves that.
I'm not saying and they were trading their accounts. I'm sorry, but people just hate the Fed now. Like, for some reason, Paul Volcker is seen as like this hero, even though at the time, remember,
he was a villain.
He was a villain at the time.
Yeah.
I'm
a revisionist history.
Okay. Could that be Powell in 20 years? Maybe they look back and they say, holy cow, this guy literally stopped the depression in his tracks.
Or, holy cow, this guy started runaway inflation.
That could
Just
be
kidding.
Too.
All right. Cars are expensive. We've been speaking about this for a while now. This blew my mind. The average transaction price for a new car topped $40,000 in 2021. Average price? It's a lot of cash.
I guess that
actually is it though? $40,000 is worthless now. It's a lot of money.
That's a lot of money.
Average used car, $25K.
Jeez. So this is the New York Times had a story that was your deal. This is like the Michael Batnick lease arbitrage. So they talk about the fact that with a lease, you have the term set in advance, and they have a buyout price that's set in advance. That's based on like a depreciation schedule when you sign up. It doesn't change. It's not based on market values. And they're talking about this, what you did with your car, right? You bought it at a lower price. So they're saying that, like, for example, this Volkswagen, how do you say it even? Tiguan? I don't even know how to say it. Could be $9,800 higher on market versus what you'd pay for it. Even like a Nissan Versa could be like $4,300 more if you would have had to buy it in the open market versus the lease. So saying that, like, you could even potentially do what you did, buy it, and then sell it for a higher price if you wanted to. Of course, then you're buying for a higher price, but still.
They said the average car may be worth 36% more than the value estimate at the beginning of the lease. So Ben, you're right. I got my car in early 2019. I'm due. I could either pay 25% more with a new lease, no thanks, or I could pay 20% less by buying the car. So yeah, you're right. I could sell the car for 25% higher but then how's my wife going to get to work?
Eat it, personal finance dorks. They're always ones telling us that leasing a car is a bad deal, right? There we go.
Oh man, shoving them in the locker. Nice, Ben.
All right.
Take that.
Have we peaked with the supply chain problems?
I think so. I think so.
Los Angeles port chief said that bottlenecks have declined. The docks, the number of containers sitting at the docks, the port are down 29%. This was the Wall Street Journal also had a piece saying supply chain problems seem to have eased. They're saying that shipping and retail executives say they expect U.S. port backlogs to clear in early 2022 after the holiday shopping season. Makes sense to me. It sounds like it's still bad. It's worse, obviously, than it was, but it's getting better. People are figuring it out, or demand is slowing, or one or the other. But, right? People are going to have their heads stuck on this one for a while, even when things kind of normalize.
Yeah. All right. So I was just reminded, I just took a sip of my delicious Starbucks coffee. So coffee has gone up a lot.
Wait, so how much more for a Starbucks?
Like a lot.
Okay.
I'm going to guess.
My wife, this weekend, she said she was sick of paying $6 for Starbucks. She bought some, I don't know what, this contraption.
$6? What is she drinking, like a latte or whatever?
Yeah.
Okay.
So she bought all these different espresso machines, and she's making lattes at home now.
Okay. Yeah. So
I'm going to retire in like 3 years now that she's not paying for coffee anymore.
But let me just say, I've accumulated so many Starbucks rewards. So it's like, so even though my coffee is up 25%, 50 stars, Ben,
it's worth
is
even more.
still
Huh?
no 50 stars is still 50 stars.
That's what I'm saying. So that's an inflation hedge.
Exactly. My
Rewards
stars
program.
are insulating me from rising coffee costs.
That's not bad.
But I had a thought for you.
Okay.
I was at soccer with Logan, and there's leaves everywhere, right? There's like piles of leaves, and the kids are getting distracted. They just want to play with the leaves. And I was thinking, and this is like the tweet where it's like takes giant bong hit. Where do leaves go? Why isn't the world covered in leaves? Because they fall to the ground, right? Obviously, you take them out of your backyard, but just all over the place in parks. They fall to the ground. We get snow. They're covered in snow. The snow melts. The leaves are gone.
Well, don't they eventually disintegrate and then they kind of act as mulch for the grass, right? Is that how it works?
Did you just crack? Are you a scientist?
I don't know. Someone could probably, I don't know. Maybe they burn them all.
Well,
You
but how
mean
about-
even in spots where people don't rake them,
and it doesn't snow everywhere.
right? No, by the way, I have a house without a lot of trees around it. Every year, I'm so thankful for that because I see my neighbors spending their entire Saturday
Garbage
raking
bags.
or
I mean,
blowing with leaves.
that's not good
Yes.
for my back. I don't think I could survive that.
You don't have a lot of leaves either, do you? You don't have trees by your house.
Not a ton.
I mean, none of that you have to rake or anything, right? But like, you see houses with these huge, beautiful trees, and it's like, oh, that's gorgeous. And then you see them out there for the entire Saturday raking them up. I'm fine having no trees.
So here's like an iron law. Once a company gets to 1 million subscribers, and I'm talking about like a content producing company. Once they get to 1 million subscribers, they typically see 20% of their audience cancel each year. We're talking about The Athletic, who currently has 1.2 million subscribers. They're having a tough time growing, and they're looking for a sale.
20%, that's pretty good turnover.
It's a lot, right?
Is that, are they saying that's average?
I think that's average. I'm not saying that that's what The Athletic is experiencing. That's average. So The Athletic is a company that does sports content, right? I mean they do sports content.
I've done like the free trial, pay $1 for a month for 3 months, once or twice.
I'm a subscriber. I never read it, but I want to support the community. They
Jeez,
raised
look at you. Good Samaritan.
There we go. They raised $140 million from investors. They're looking to sell, but for between $600 to $800 million. Apparently, the Times looked at them and said, they're worth $500 million. But they did $41 million in revenue in 2020, on pace to do 77 in 2021. So it's not like a garbage business, but they're struggling with growth. Content is so hard. Content marketing, digital, like.
Here's the thing that I can't figure out. Like, you're seeing these insane valuations paid for takeovers in all sorts of industries and fields right now, right? Like these huge numbers. You go, I can't believe that company is worth that much money. What are these companies doing that buy them? Is it just to get competition out of the way? Because you can't, like, if a company is just being paid for this huge multiple of whatever you want to put on it.
So what happens with the companies that are overpaying for these businesses? Is that what you're saying? Yeah.
Like, is it just that we're getting rid of competition and it's fine? It doesn't matter if we have to write it down?
I think a lot of the companies that are being bought by other private companies.
That could be it. I see some of the numbers and you go, how is that ever going to work mathematically that they're going to get a good return on the capital from that acquisition?
Yeah.
How do you two think about rebalancing versus holding things like crypto? For example, I put 2%, the amount I was willing to lose of overall portfolio into crypto, and now it's almost 10%. The Bitcoin I want to hold forever, but what about the others? I entered this speculation clear-eyed about the fact that it could go to zero, but not as clear about how to exit as it rose. Or maybe even being more honest, I plan to hold Solana forever too, but now I'm considering trimming some of it back.
Here's my answer. You have to have rules before you go into this.
Yes.
And you could change them. I mean, it's not, you could break them if you want to, but at least you have to have something, because right now you can't think clear-eyed about this anymore. Once you went from 2% to 10%.
I think there's different kinds of buy and hold. There's buy, hold, and rebalance. There's buy and hold until something better comes along. And then there's like buy, hold, my narrative changed, or buy and forget. Like I think you do have to, like, I think when I bought Bitcoin and I put a tiny amount of money into it, like back in 2017, for me, I'm like, I'm going to buy and forget this. I'm never going to touch it. But I had that going in. I think you have to understand, because you're right. When it gets too high or too big and you go, oh, I'm going to kick myself if I don't sell some and take some profits in it, and it crashes 70% from here, whatever it is.
We've said ourselves, like in the past, I'm selling at 75,000. Oh, I'm going to sell at 100. I mean, it's not easy.
And then every time it goes up, we increase our ceiling a little, don't we?
Right. It's not easy. There's no perfect answer behind this.
But that's why I think the exciting stuff in crypto, from my perspective as a TradFi guy, Boy, that sounds really bad to say. Is that like the portfolio management tools for this stuff are coming where you can have it as part of a portfolio more easily and rebalance it and have it be part of everything else. And that makes your life easier so you don't have to think as much about this stuff.